Despite the muted guidance, today the stocks are seeing quite a bit of a bounce back. But it's an excellent time to get in Chakri Lokapriya from LGT Wealth India to discuss market fundamentals, its top sectoral picks. Chakri, thank you so much for joining us. Been a while since we saw you. First up, give us your sense as far as the IT pack is concerned. FY26 guidance, not so strong, but are most of the negatives now priced in?
Good morning. Thanks for having me. Yes, if you look at IT as a sector, if it's down about 20% from its February highs, from December for the last 3 months, stocks down about 25%. Now they're trading at, if you take Wipro, probably 17 times, HCL Tech slightly higher, and they kind of reflect the subdued environment, that is the uncertainty as it relates to discretionary spends. So, how much lower can these stocks go? Not really that much, because it's largely collateral damage related to the tariff uncertainty spilling over to discretionary spend. So I think it's time to start, maybe an HCL Tech, maybe a little bit of Infosys to start buying now.
Chakri, good morning. Thank you for joining in. Since we are on the subject of tariffs, and you mentioned that another sector that's bearing the brunt of it is pharma, and it's almost hanging in the balance here, right? Donald Trump saying that there will be tariffs at never seen before levels, but then how much do you trust his word? Because history has been evident that he said a lot of things and then pulled back on them. What do you do in an uncertain environment like that in a sector like pharma? Because a majority of their revenue do come from the US market.
Good question. If you look at it and taking into account the uncertainty surrounding the situation, the tariff that India imports on US pharmaceuticals into India is about 10%. Roughly, depending on the product. And if you impose that same number on India's exports into the US, that's on the US exports bit alone. So that's for 10%. That would translate to maybe 5-7%, depending on the company, whether it's Reddy, Sun, depending on their exposure. So the stocks have corrected. I think at worst, they can go down under 5-7%. That is the export-facing ones. So if there is a 10% imposition. So that's another way to look at it.
Chakri, in view of the tariffs, right, that have been imposed on quite a lot of India's neighbors, names, like China, like Vietnam, how do you see, select Indian sectors benefit? You have a view on textiles. Would you be positive there? Which are the names that you'd like to get into? Also, any view as far as, some of the manufacturing names that do export to the US market, names like Wari, names like Premier. Do you have an opinion there? Do you own any of these stocks?
The good thing is about if you look at a country like Vietnam or China, who also export textiles, and the tariffs on them is far higher, 45% for Vietnam, some 150 odd, 45% for China. Whereas in the case of India, if you take the current tariffs, on top of that you add the 10%, which is the 90-day pause, and then let's say there is some more, that will take it to roughly about anywhere about 28-30% tariffs. Now, if that happens, still Indian exports or to the US textile will be far more attractive versus from Vietnam or from China. So from that way, some incremental business could come in. So more volumes, slightly lower margin would kind of offset the whole thing. Now, as I say, now talking about Wari and all those companies, there are two things which are happening. One, there is a defocus of green energy in the US, so which means lower subsidies in the US for those companies, and therefore the price points will move higher, margins will move lower. Companies like solar are already trading at probably 60-70 times, so they probably have done their bit, so I'd wait and watch.
Wait and watch in this case. But Chakri, a sector that has been in focus over the last few days have been banks, and out of nowhere, the Nifty bank until almost last month was making lows, but now it's at record high levels. With all of these measures taken by the Reserve Bank of India, the liquidity measures announced, in fact, the results delivered by the heavyweights like HDFC Bank and ICICI Bank on the improving side, what about banks? Have they run their course now with the kind of up move that you've seen over the last few days? Or do you feel that banks could be a potential safe haven considering its domestic focused business and amidst all of this tariff drama?
You're absolutely right. In fact, banks can and will be, I think, a safe haven. One, they're very strong, clean balance sheets across the board, majority of the companies, whether it's private or public. Second, provisions, etc., have been taken care of, NPAs are low. Third, valuations are very intact. SBI is still trading at one-time book, and Axis and ICICI also trading very decent numbers. Now, they've run up in the last 1 week or so. Some of the stocks are up a good 10, 15, 20%. So there's a round of profit booking, but clearly valuations are pretty much on their side and still be buyers in financial services.
Chakri, your buyers in the BFSI space, you've mentioned SBI continues to trade at slightly muted valuation. Now let's come to the NBFC pack, right? First rate beneficiaries as far as, or the first line of beneficiaries as far as rate cuts are concerned. Within the NBFC pack, which are the names that you like? Would you prefer vehicle financiers? Would you prefer the MFI space? Or would you prefer the home financiers?
NBFCs clearly benefit, as you mentioned, because of both the RBI rate cut as well as the liquidity measures. So one will boost the volumes, the RBI rate cut. Second, the liquidity measures will also improve the margins of the business going forward. India has gone through a slowing down patch, and NBFCs are also going down, and now they will pick up. The power financiers, Power Finance, RDC, extremely strong companies, very low NPAs, valuation still under a book, roughly, and very strong growth ahead. So those are ones. On the other hand, there's companies like Shriram Finance. These companies, again, financings, commercial financing and other such areas now will start picking up with the economy beginning to turn.
Chakri, a lot of measures have been taken with regards to the steel sector as well. The safeguard duty that was imposed yesterday on steel imports for a 200-day period. But what about metals as a whole? Ferrous, non-ferrous, which side are you on? And do you believe that metals remains that perennial tactical play that it has been, especially considering that there are a lot of moving parts to the sector, be it the dollar, be it China? Or do you see that, okay, there is now some investment potential with all the tariff tensions that are going on, so that can be taken a bet on?
I think it's still a tactical play because valuations are still reasonable, whether it's Tata Steel, Jindal Steel, name it. They're all very reasonable valuations, but they're a global sector. There is tariff. Even in the worst case scenario, there is no pricing power for the Indian, whether it's ferrous or non-ferrous companies. To an extent, Hindalco, they have US operations as well, probably better situated. But with the current slowdown that we're seeing, or rather uncertainty, there is no real catalyst for the metal stocks to move on.
Right. Chakri, you've spoken about metals. Let's also talk about the other commodity play, which is cement. We've seen quite a lot of consolidation in the space. We also understand that as far as South Indian cement companies are concerned, there have been a few attempts at price hikes in the last couple of months which have managed to hold out. Cement, which are the names that you like? Do you like any of the names? And the second set of stocks that I want to discuss with you is the capital goods space. Falling oil prices, does that bode a little weak as far as L&T's order book is concerned, or would you continue to play domestic-facing themes, maybe like an ABB or a Cummins?
If you look at the cement companies, you have the two big boys, which is Ultratech and Ambuja. And, they are now leaders, not just in volume, but also in acquiring market share, as well as acquiring companies out there. So against this environment, pricing growth has hardly been there in the last 2-3 years. And therefore, volume growth, on the other hand, is expected to improve a little bit as, the whole interest rate cuts happen and the economy starts to revive. Second, in terms of pricing power, they're trying, but I doubt there would be anything meaningful. So against that, I think it's Ultratech and Ambuja is the easier way to play, and maybe a JK Cement and a Dalmia Bharat in the broader markets.
One final question from my end, Chakri. The capital market plays as well. They've been the ones that have been the highlight of the street over the last year and a half, be it BSC or be it CDSL. How would you play this theme? Would you play it through these names, be it the BSCs and the CDSLs, or would you play it through the asset managers like the HDFCs, the Nuamas and the likes?
The asset managers are probably slightly easier to play. There is margin pressure, yes. Stocks have kind of reacted to that, but the incremental volumes will probably have continued to happen. But the CDSLs and the BSEs, they have various other things like regulations and pricing issues, so I'd rather stay away from that.
Thank you so much, Chakri, for joining us. Hope to see you more often, for giving us your view on a whole host of sectors. Well, moving on, we'll now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.